Imagine a world where billions of dollars of climate finance move as easily as a token across a ledger, where large-scale, impact-driven projects are open, transparent, and accessible to institutional capital. That's the promise of real-world assets, or RWAs, and why they matter for tokenized ESG investing. RWAs are blockchain tokens that represent real, tangible assets, real estate, infrastructure, renewable energy projects, commodities, or other yield-generating instruments. By taking traditionally illiquid assets and converting them into tokenized pieces, RWAs can create fractional ownership, increase market access, and introduce new liquidity to investments that were once cumbersome to trade. For ESG-focused capital, that matters. It can turn slow, private projects into investable, verifiable opportunities on-chain. One of the biggest barriers to broad institutional participation in ESG has been trust, not just in reported impact, but in the integrity of assets and the frameworks governing them. Blockchain-native RWAs can add a new institutional trust layer by leveraging transparency, immutability, and cryptographic provenance. Investors can trace asset history, verify ownership, and see on-chain representations of cash flows or impact metrics, reducing the information asymmetry that often fuels greenwashing and skepticism. Beyond transparency, tokenization introduces practical benefits for ESG finance. Fractionalization lowers minimum ticket sizes, enabling more diversified exposure across projects and geographies. Smart contracts can automate payouts and compliance checks, increasing operational efficiency and reducing administrative friction. Together, these features make it easier for pension funds, insurers, and other large investors to structure and monitor ESG allocations at scale. The climate opportunity is enormous. Rapid decarbonization requires investment in clean energy, resilient infrastructure, and nature-based solutions, projects that are typically capital-intensive and slow to syndicate. RWAs can act as a bridge between traditional finance and on-chain markets, opening up new pools of capital and accelerating deployment. When institutional investors can reliably access tokenized, impact-verified assets, the flow of funds into climate solutions can accelerate materially. It's worth noting this is not a shortcut. Robust legal, regulatory, and operational frameworks are essential. Custody arrangements, enforceable legal rights, reliable oracles, and clear compliance pathways will determine whether tokenized RWAs truly realize their potential. The technology can enable trust, but governance and regulation must reinforce it. Ultimately, RWAs offer a concrete path to scale tokenized ESG investments. By combining the openness of blockchain with rigorous legal and reporting frameworks, they can unlock liquidity, build confidence among institutional investors, and channel substantial capital toward climate and social projects that need it most. If we get the technology, governance, and incentives right, RWAs could be the trust revolution that finally brings large-scale climate capital on-chain, and with it, a faster, more transparent route to meaningful impact.